If you're comparing the best term plan with critical illness cover, you've probably asked yourself this question: what is critical illness cover in term insurance? After all, if you already have health insurance, why would you need another layer of protection? Is a critical illness rider simply another insurance add-on, or does it solve a problem that health insurance doesn't? Let's imagine something for a moment. You're in your mid-30s. You've built a stable career. You're paying a home loan, supporting your parents, planning your child's future. You have health insurance. You also decide to buy a term insurance plan to secure your family's future. Everything seems covered until one unexpected diagnosis changes everything. Not because of the hospital bill, but because life outside the hospital doesn't stop. Your EMI still needs to be paid. Your household still has monthly expenses. Your family still depends on your income. And if recovery takes months, your financial commitments continue long after you're discharged. That's where a critical illness rider comes in. A critical illness rider on a term insurance plan pays a lump sum amount if you're diagnosed with one of the specified serious illnesses covered under the policy. Unlike health insurance, which is designed to cover eligible medical and hospitalization expenses, this payout isn't linked to your medical bills. It's money you can use however you need, whether that's replacing lost income, paying EMIs, covering treatment beyond insurance, or simply giving yourself the financial breathing room to recover. So do you actually need one? The answer depends on three things. First, the health cover you already have. Second, how dependent your family is on your income. And third, whether the illnesses covered under the rider match your personal health profile and financial risks. Over the next few minutes, I will help you understand each of these factors so you can decide whether adding a critical illness rider to your term insurance plan is the right decision for you. Let's understand this through someone we'll call Priya. Priya is 35. She's a software professional. She has a promising career, a home loan, parents who occasionally depend on her. And like many professionals, she already has employer-provided health insurance. Then one day, Priya is diagnosed with early-stage breast cancer. Naturally, her first concern is treatment. Thankfully, her health insurance helps cover eligible hospitalization expenses. But almost immediately, another financial reality begins to unfold. Her doctor advises several months of recovery. She won't be able to return to work immediately. Suddenly, the challenge isn't just paying hospital bills, it's replacing months of lost income. It's continuing her home loan EMI, managing everyday household expenses, traveling for consultations, paying for rehabilitation, seeking a second medical opinion, or simply giving herself the freedom to focus on recovery without worrying about money every single day. This is exactly where a critical illness rider works differently. Once a covered illness is diagnosed and the claim is approved according to the policy terms, the rider pays a predefined lump sum, not reimbursement, not based on invoices, not linked to the final hospital bill. A fixed amount that was chosen when the policy was purchased. And because it's a lump sum, Priya decides how to use it for treatment, income replacement, home modifications, recovery expenses, or simply maintaining her family's lifestyle while she gets better. If I already have health insurance, why would I ever need a critical illness rider? Let's answer that. Now let's answer probably the biggest question people have. If I already have health insurance, why would I need critical illness cover at all? It's a fair question, because at first glance, both seem to protect you when you fall seriously ill. But they actually solve two completely different financial problems. Let's break it down. Health insurance is designed to cover eligible medical expenses, hospitalization, surgery, room rent, doctor's fees, medicines, subject to the policy terms and limits. In other words, it's designed to help pay for your treatment. A critical illness policy or a critical illness rider attached to your term insurance works differently. Instead of reimbursing bills, it pays a predefined lump sum amount once you're diagnosed with one of the covered critical illnesses and your claim is admitted as per the policy terms. Depending on the rider, these may include conditions such as certain cancers, heart attack, stroke, kidney failure, major organ transplant, and other specified illnesses. Always refer to the policy wording for the complete list of covered conditions. That payment isn't linked to your actual hospital bill. Once the claim is admitted, the benefit is paid as a lump sum and can be used at your discretion. Because the purpose isn't simply paying for treatment, it's helping you deal with everything that treatment disrupts. Let's go back to Priya. Her hospital bills are largely covered by health insurance. but her salary stops while she's recovering. Her EMI doesn't stop. Her household expenses don't stop. Traveling for treatment, follow-up consultations, second medical opinions, lifestyle adjustments, maybe even temporary caregiving support. These expenses continue, whether or not they're covered under a health insurance policy. That's exactly where a critical illness payout can help. It gives you financial flexibility during one of the most uncertain periods of your life. So instead of asking which one is better, the better question is, do they work together? And in many situations, the answer is yes. Health insurance helps protect your treatment. Critical illness cover helps protect your financial stability while you recover. They are complementary, not duplicates. But here's another question. If critical illness cover is so useful, should you simply add the rider to your term insurance? Or is it better to buy a completely separate critical illness policy? Let's compare the two. Once you understand what critical illness cover does, the next decision becomes much easier. Should you add a rider to your term insurance? Or buy a standalone critical illness policy instead? The answer depends on how much flexibility and coverage you need. A critical illness rider is attached to your term insurance policy. That usually makes it a convenient way to add another layer of protection while buying your life insurance. It's often suitable for people looking for moderate critical illness cover as part of a broader financial protection plan. A standalone critical illness policy, on the other hand, is a completely separate insurance policy. It has its own sum insured, its own policy terms, and it continues independently of your term insurance. Because it's separate, it may be better suited for someone looking for a higher level of critical illness cover or greater flexibility that's independent of their life insurance policy. So which one is right for you? Let's simplify it. If you're buying your very first term insurance plan and you want additional financial support in case of a covered critical illness, a rider can be a practical option to consider. But if you have significant financial responsibilities, a higher income, or you're specifically looking for a larger critical illness cover, a standalone policy may offer greater flexibility. This is why there's no single answer to the question, what's the best term plan with critical illness cover? The better answer is, the right solution depends on your financial profile. And that's exactly what we'll look at next. Who actually benefits from adding a critical illness rider and who may not need one at all? By now, you probably understand what a critical illness rider does. The real question is it the right choice for you? Let's make that decision a little easier. Think about which of these three situations sounds most like your own. Profile 1. You should seriously consider adding a critical illness rider. Ask yourself these questions. Are you the primary earner in your family? Would your household struggle financially if your income stopped for an extended period? Are you paying significant EMIs? Do you not already have a standalone critical illness policy? Or do you have a family history of serious illnesses such as cancer or heart disease? If your answer to most of these questions is yes, then a critical illness rider could provide an important financial cushion. Because in your case, the biggest risk isn't simply paying medical bills. It's losing your income while your financial responsibilities continue. A lump sum payout during recovery could help your family continue meeting those commitments while you focus on getting better. Profile 2. A standalone critical illness policy may be worth considering instead. Perhaps your situation is different. You have a higher income, larger financial commitments, or you're specifically looking for a much higher level of critical illness cover. You may also want your critical illness protection to remain completely independent of your term insurance policy. In situations like these, a standalone critical illness policy may provide greater flexibility depending on your coverage requirements and policy features. This is where speaking with a qualified financial advisor can help you assess which structure better matches your needs. Profile 3. You may choose to defer the decision for now. Now let's look at another possibility. You already have a comprehensive standalone critical illness policy. You have adequate health insurance. You're relatively young. You don't have significant financial liabilities. And there isn't a known family history of major critical illnesses. In that situation, adding a critical illness rider immediately may not be your highest priority. That doesn't mean you'll never need one. It simply means your current protection may already address the financial risks you're trying to cover. Financial planning isn't static. Your responsibilities will change, your income will grow, your family situation may evolve, which means the right time to review your protection could be a few years from now. There isn't one single plan that's right for everyone. The right decision depends on your existing health cover, your financial responsibilities, your income dependency, and your personal risk profile. Understanding those factors is far more valuable than simply choosing the lowest premium or the longest list of features. So how does this fit into ABSLI's offering? And before you make your final decision, let's answer a few of the most common questions buyers ask about critical illness riders. If, after understanding your own financial profile, you believe a critical illness rider could add meaningful protection, it's worth exploring the options available with your insurer. ABSLI offers the option to add a critical illness rider with eligible term insurance plans. The suitability of that rider depends on factors such as your existing health cover, financial commitments, and the illnesses covered under the rider. Always review the product brochure, policy terms, exclusions, waiting periods, and benefit structure before making a decision. Now, let's quickly answer some common questions. Does adding a critical illness rider reduce my term insurance death benefit? It depends on how the rider is structured. Some riders provide an accelerated benefit where the critical illness payout may reduce the remaining death benefit. Others provide an additional benefit without affecting the base life cover. Always check the rider terms before purchasing. Does a critical illness rider cover pre-existing conditions? Generally, pre-existing conditions are not covered immediately and may be excluded or subject to waiting periods depending on the policy terms. Always review the policy wording carefully. Is the critical illness rider payout taxable in India? Tax treatment depends on the applicable laws and your individual circumstances. It's advisable to consult a tax professional or refer to the relevant provisions of the Income Tax Act. What happens if I stop paying my term insurance premium? Since a critical illness rider is attached to the base term insurance policy, the rider's benefits are generally linked to the status of the underlying policy. If the base policy lapses, the rider may also cease, subject to the policy terms. Can a nominee claim both the critical illness rider payout and the term insurance death benefit? This depends on whether the rider is structured as an accelerated or an additional benefit. The policy terms will specify how claims are treated. Is there a waiting period before I can claim? Most critical illness riders have a waiting period from the policy commencement date. Claims for illnesses diagnosed during this period are generally not admissible. Always check your policy wording for the applicable waiting period and conditions. Choosing a critical illness rider isn't about buying more insurance. It's about understanding the financial risks that health insurance alone may not cover. For some people, a rider can provide valuable financial support during recovery from a covered critical illness. For others, a standalone critical illness policy may be a more appropriate choice. And for some, the decision can wait until their financial responsibilities change. The important thing is not to add or reject a rider simply because it's offered during the purchase process. Take a few minutes to evaluate your own situation. Consider your existing health cover, your family's dependence on your income, your financial commitments, and your personal health risks. When you understand those 4 factors, choosing the right protection becomes a much more informed decision.